Okay, so before we discuss about this, I would first state that, this is more for a medium-term portfolio kind of a view that we are going to discuss about right now. So don't take that as an immediate trading. There's a good opportunity that exists for which we feel that, one should be taking a trade over here. So now this is the long-term chart of Nifty. If you look at the pattern of what it has been formed, right now. So Nifty has been falling since long time. It is nothing new. 9119 was the high, and right now we are around 7400, right? And now people are feeling that there's a panic, right? So there is already a very big correction that has taken place. It generally happens that when a selling climax happens, it happens like this, and the pattern matures, and then we see a breakout on the other side. So if you look at the pattern formation that has been there, this is a typical channel that was formed long time back. Generally, we expect either a 3-wave or a 5-wave within that setup. So given that it is a long-term channel, generally it is a 5-wave pattern within the channel, right? And a very rare chance of it getting extended. So we can see that last time when this formation happened, we had a 24% move in just 2 months, right? And if you look at the Nifty right now, it's almost similar to what happened at that point of time, and the fifth wave is approximately there. It's not exactly 7400 or 7500, so it comes around 72 to 73, but then, it's very difficult. If it doesn't come, if it doesn't fall another 100, 200 points, then we miss on the trade, right? There's no trade that we get. So it's very difficult to go and exactly buy at the bottom, but then we know that from here to 300 point more, but then that is the area where we should probably be seeing a kind of a bottom. Now, if you talk about the probability, I would say that 70-80% is the probability that it will break out on the upside, and 20% or 30% is the probability that it will break down on the downside. But one thing is sure, the move will be very, very big, right? So if we have to go and create a option strategy, I would say for February, we might just go and buy a call and a put, right? Because the premium will automatically be, so the movement will be bigger than what the premium that you'll be paying. But then for now, we are discussing a more of a medium term thing. We know that the risk is very limited, and if at all this pattern matures, then we have at least a 15% move, if not 24% that happened last time. And there are opportunities where we can go and play this around. So now, if you look at the rotation chart, right, so this has been one of the model which has been working fantastic for us so far. For the last 3.5 years, we have been following this. So we gave a sell call on Nifty that was approximately around, so this model gave a sell call around 8400. So it was not exactly at the peak, but then still it gave a good, decent sell call at the right point of time. And now we can see that it is again rotating back. It is still not in the buy zone. As I said, there's another 300 point of a downside, which is very much possible. But then after that, you can see that, this turnaround has already happened on the relative trend chart as well, which means that 1 month, 1.5 months down the line, there's a bottom in place, and then we might see the market also moving higher. Now, why we are showing all of these charts right now, rather than, waiting for some more days, the only reason is that there's a spike on the short-term chart, right? Had this would have not been formed, I would have not talked about this study right now. I'd have waited for another 200 points. But because there's a spike on the short-term chart, this generally says that there's a bottom in place, at least from a short-term perspective. And when the long-term trend is also matching around that, we should ideally go and take a trade rather than waiting for, grabbing that last 200 points movement. So because there's a spike, we might see that that spike will again get retested. 7400 might again come. It might again break down below the spike for a day and then again go up, right? So all those kind of a whipsaw can happen. Now, how we have to play on this view is, if you look at the option premium for the March series, I'm not talking January or February, I'm saying, that this will play out in 1.5 months. So let's go with the March series. 7500 put, the cost is around 2.2%, right? So I'm saying you buy 7500 put and sell 6500, which is far off, right? So even if we go wrong, we have a cushion of 1000 points. So you go and sell 6500 and buy 7500 put, the net cost is 2.2%. If you create a portfolio, I'm saying a large cap portfolio, not mid caps, which is very highly correlated to Nifty, or maybe if you do it on Nifty, your exact cost is 2.2%. So that's the only risk that you are taking, and what we are looking on the other side is a 15% movement. right? So 2.2% cost and 15% movement is what we're talking about on Nifty. On portfolio, even if you go and hedge 1.5 times, because obviously the beta of stocks might be higher, right? Then the cost comes to somewhere around 3.25%. So the cost of hedging your portfolio right now is 3.25%. And on the upside, you can at least get 15%, which is a fantastic reward to this. So I would suggest, don't be in a very hurry. So don't be in a hurry कि अभी बोल दिया है तो अभी जाके करना है. Gradually, 7,400 approximately. So you know that the SGX Nifty is down today. Gradually start building this position. With a hedge, I'm not recommending anything without a hedge, because if my view goes wrong, I don't want you to get trapped. With a hedge, take a cost of 3% approximately. That's the maximum loss that can happen, and take this trade gradually. And we believe that, there's a very high probability that, this might play out. For short-term traders, we'll obviously keep updating as to how and when we can go and trade. But this is a view that comes up for, so the reason I came down today that, the reward to risk is very high, at least for the medium-term portfolio perspective. So I think this is something that we should start recommending to our clients. Thank you.